back to Ascent Trading, and today we're going to be talking about trend counts. Now, trend counts are super simple to understand because they consist of one of six things, right? Six types of movements in the market at all times. We have higher highs, higher lows, equal highs, lower lows, lower highs, and equal lows. Now, these six different types of candle structure make up trend counts. Now, what do these look like, right? Well, we take a low of a move, and then what's the move that follows it? Sure, you can go here and say that's a higher low, but it's soft. That's not really a firm higher low. If we go here, it's more of a firm higher low, and then we have another firm higher low, and another one, right? And then we sort of get an equal high up here, and it's right back down to a lower low. Higher low, equal highs. We'll see what this sets, right? So trend counts are the way that we read the chart, and we swing dailies, we swing hourlies. We basically want to look at these charts and be like, hey, there's an opportunity for a higher low at this level, so we might short to get there, or we might be looking for the bounce off of there. Trend counts are when multiple of these higher highs, higher lows, and all the equilibriums are made up to perform one trend, either up or down, right? And some people indicate these with a trend line. Now, if we go from a low to our higher lows, we can see that this creates a trend upwards. You can see that once we got the break of the trend line, kind of down here, and then we were back up in, and we haven't been really able to recapture. We just kind of, rejected. It's interesting that we can kind of use this as confluence to our trades. And what we see up here is we see that, oops, I went back too far. Oh well, we'll see that, these are kind of equal highs right here. So what does that signal? Possibly some topping pressure maybe on the upwards trend? Probably. So some pullback maybe is imminent. Maybe we need to go to our daily chart and we need to see where a pullback is really necessary, right? And trend counts are very simple to understand because all stocks move, but not all stocks move the same. So if we focus on our trend counts, we can figure out where good buy spots, sell spots are within the market that we can be actionable on. In other news, look at how I'm absolutely fucking destroying my workout with this goddamn ice cream sundae. I'm gonna fuck this shit up. When talking about trend counts and we look on the hourly chart to maybe see where a good higher low can develop, we look simply here, right? We have a lower low in our 1 hour trend count. We then have a higher low, increasing the upward expansion. Now, here's where things get a little lucrative. Obviously, we make a gap into the next day, and we do not close that gap. We support actually right on it. This causes a little chop range, a little indecisiveness, eventually into a higher high. So we have a lower low, a soft higher low, consolidation, and a higher high. Now, overall, what are we missing here? A hard higher low. So where can that higher low possibly develop? Well, we have this gap with the consolidation above it. Now, this shows strength. Consolidation above an open gap is very much a bullish signal. However, if we were looking for an hourly higher low, I would say that gap close is a solid level. And where did we make that higher low? Right around that level. Sure, we wicked through it a little bit, but relatively all the same range, right? If we were to, take a short off this highest high, maybe off this low, maybe off this lower high development, we could have found the higher low in the trend count here. And of course, we would have been shooting for the higher high in the trend count. Oh my god, I'm so fucking gonna vomit. We could have shot for the higher high in the trend count, but we did not get that. We had equal highs. So, moral of the story, when we go to read trend count, we want to make sure that we're looking for the higher highs, the lower lows, the higher lows, the lower highs, the equilibriums. These are all relevant to how stocks move. And this is universal. This works on any stock. You can go to any chart and path out a trade like this. Where trend counts get even better is when we start adding our technical analysis, our key levels, right? We were just looking at the equal lows on the consolidation above the gap. That looked really good, and we can see here that I definitely took some trades off of here, right? We took a lower high development under 689 to get down to 687. Maybe we were looking for gap close at some point. And then we took the VWAP hold up here. This isn't really what we're looking at, though. What I'm really looking at are these two trades right here. We have a short down to 687, and then we take longs off of 687. Now, here's where we look at our equal low, which is at 687 or around that range within a few cents, and we say, hey, if we bounced off it before, we can bounce off of it again. So we take the long there, right? And of course there's a VWAP hold and probably a fair value gap retracement somewhere in there on a smaller time frame, but we're not going to get into that today. So basically what I'm saying is that a mix between your technical analysis and your trend count analysis can be very beneficial for your trading. Using each of these trend counts and using all of these cohorts of buying and selling and higher lows and lower highs and all that, it can give you a daily bias. And daily biases are helpful because it kind of tells us what we're looking for in the trading session. It can help us develop where higher lows would be good off of our key levels. And oh my god, I've been talking way too much today. That's my problem. What we really look for with trend counts in our trading strategy are higher lows, lower high developments intraday. I'm not really a big short guy. I won't take a long position short simply because stocks only go up, realistically, okay? Yeah, you can say that a stock tanks and goes to zero, but it really doesn't unless it goes bankrupt. So the way I see it, you're better off going long than you are short, but that's just me. I'll take short scalps off of lower highs intraday, but I'll never take, long shorts, like, daily or swing shorts. Unless a company has a bad news catalyst, but there's so many boxes that needs to check in order to happen, but regardless. When we look at the charts and we're looking at the trend, that should tell you everything you need to know about what you're looking at, or what you're going to do, sorry. If we're at a higher high and we made a lower high on the daily, chances are we're probably going down more. If we're, getting really strong buyers and a really long wick into a bullish hammer and we're going to a new higher low spot, or we made a higher low and are now going to all-time highs, or making that higher high in the trend count, well, I would say that you're in an uptrend. And it all has to do with relevance, right? I mean, if we go back all the way, we can, I wouldn't say, I would go to the daily. This is hard on the daily. We'll go to the week, fuck it. We can put a trend line, oh, I forget that it does this. Un momento, let's go to the XPX, okay. We can put a trend line from, we'll say, March lows to now. Interesting, right? 1, 2, 3, 4, 5, and now we're just getting another tick into it. So, what do trends do for us realistically? It gives us a bias on where price is going to go, right? If we break down out of this trend and make a lower high, we're going back down. That's a fact. If we, start rejecting off of this level right here and we start, wheedling back up, we're going back to all-time highs. It's a very simple thing to understand, and a lot of people will oversimplify it, and you simply just don't need to do that. I've seen so many people over the years get so caught up with their daily bias and with the trend, they just don't see what's in front of them. And this will go back to the point that I enforce all the time. We always trade the chart in front of us. So if we have good technical analysis and we have good trend count analysis, there's no reason that we should not be profitable with our trades. I believe I've said this once before on the YouTube, if not in the course. The bread and butter of my trade is the lower high development off of the overnight high to short into previous day's high, and then taking longs right off of that. And that's a perfect higher low spot going into the daily trend. And a lot of people don't realize that's a very simple, easy trade to take. We mark 2 levels max, your overnight low, your yesterday's, or your previous day's. I'm talking way too quick. Holy shit, my brain is fried. I will take 2 levels all day if you really needed them, the overnight high and the previous day's high, because if you're opening on a gap up and you reject the overnight high, chances are you're going to close the gap to previous day's high, and that's a great short any day of the week. You can take that every day and most likely get at least 30% out of it. It gets a little finicky when you talk about gap sizing, how much you're gapping and how many points it is and blah, 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 but those are all, speculative and all have to do with a checklist that we take when we take trades. And we'll talk about that checklist at some point on the YouTube, but I don't know when yet. I don't know. I'm still trying to figure this out fully. Basically, if we keep our trend count analysis good, that should be enough to take trades off of. Because if we can take a good higher low spot, if we can take a lower high rejection, we can be profitable off those moves. Rather we're swinging, rather we're taking intraday moves or all that. But the key to it is discipline. Staying disciplined to your analysis, staying disciplined to your daily bias, staying disciplined to not take a trade if it's not in your favor, staying disciplined to respect our key levels and respect our stops. Today, recently on the TikTok, we were talking about core weave, and let's show this. Let's go to core weave. Let's show this absolute disgusting chart. We're up 2.5% into the night. Are you serious? Oh my days. All right, this chart is just painfully chopping down. I mean, today's a little more high and tight. So the big problem that I have with core weave is that I was looking for calls on the first retest right here of 90.50, right? And I thought, okay, we're gonna go back up, we're good. Initial first rejection, and then we got another tap here, another tap here, another tap here, and then it was just all downwards today with a lower high. So realistically, what sucks about this is that we went from a range to a downtrend, which is awful for my calls because, I got stopped out at 10% this morning because I moved up my stop loss because yesterday was awful. But what I'm curious now is that do we come up back to 87.25, make that lower high off technically a higher high in our trend count, or we can call that equal highs. But if we make this lower high, I could imagine that we're going down a lot more, probably to, if I go check the gaps on this, let's go to the hourly, let's see. We could probably go down to 81 or all the way down to 78.25, which would suck. This is very dependent on NVIDIA as well, which I don't think NVIDIA's been doing too good either. No, NVIDIA's been doing awful. Alright, well, I think that about does it for trend counts. Not a very long video, nothing really too much to explain. Very simple process of figuring out what the market's doing and how to analyze the charts with your trend. I think that's a word. We're going to say it's a word. But thank you for joining me. Like and subscribe. Follow us on Instagram, Twitter, not Twitter. Oh my God, Twitter. Follow us on X. And follow us on TikTok. All of those will be in the description and in the YouTube profile. So thank you guys, and have a wonderful trading day.